Hello and welcome once again to the Smart Money Dumb Money Show. I'm your host as usual, Keith Richards. I'm President and Chief Portfolio Manager with Value Trend Wealth Management. And no, I'm not the rock star. So I am going to talk today about the country ETFs that we should be looking at. And in fact, I'm going to roll through quite a list of stock charts. This list is pretty all-encompassing, so there's a lot of smaller markets on the list as well as larger markets. So really what I've done is taken a fairly simplistic look by using basic trend line support resistance analysis. I'm not really looking at any of the usual indicators today that I like looking at because we have so many charts to go through. But what I want to give you is an idea of some of the charts that look attractive and some of the charts that maybe don't look attractive or are nearing a point of technical resistance and should be perhaps watched rather than bought. So let's take a look at what's out there in the great big world and see if there's anything interesting for us as investors to be buying. And today is the 28th of November. So as usual, you'll be seeing this video about a week after I recorded it. So just keep in mind that the charts I'm looking at are as of today's date. So let's get right to it. So I'm going to start with Brazil, and we hold this at Value Trend. We bought it a while ago, and I wanted to start with Brazil because it's probably a chart that I can illustrate a concept to that you should be aware of if you use stockcharts.com, which obviously I am using here. All right. So what you're seeing here is a support line that's very, very well defined on Brazil and a resistance line. And you can see how precisely that line has been touched over and over and over again, right around 34 bucks. Well, that is interesting because you might ask, well, why are you still holding this ETF, Keith, if it's hitting your target? Well, I want to illustrate a principle here with stockcharts.com, and that is that whenever you're dealing with any stock or index that is paying a very, very high dividend, then you have to be aware that stock charts builds that dividend back into the price and it distorts the chart. And I find this a real fault with stock charts, but you can actually change that. And I'm going to just, pardon me for looking down for a second, I'm going to just do that right now by you put an underscore before the trading letters of the security you're looking at. Now, I normally don't bother with this because most stocks and most ETFs don't pay huge dividends. You do want to do this when you're looking at things like banks and utilities, stuff like that. But it just so happens that the Brazil ETF is currently paying a crazy high dividend, which I don't mind as an investor in it, but it's pushing 8%. So with that in mind, if we put this underscore and we change it, take a look at how that's differed. So you can see that the chart does have a very defined support level around $26, as we saw in the last, but it's actually been kind of in a declining peaks rather than that very flat look on the chart we just looked at. So I feel that this stock or this ETF could possibly break through. It does have some resistance at 34, like the chart we just looked at, but this is over the same period of time, and yet you can see that there have been higher peaks in the past, pushing $40. So I just wanted to show you this, that we are still long the stock because it looks to us like it may have a good shot at breaking 34. Now, look, if it doesn't break through, then we'll be selling, because if it starts to round over, we know it'll go back down to 26 again. But keep this in mind, that whenever you have a super high dividend ETF or stock like Brazil, You see, same period of time, and it's totally distorted. So I wanted you to be aware of that. So this is the one I started with because it's the only one really that I had to show you the difference when taking out the dividend, and just to show you that it's not quite as cut and dry as it appears. Okay, so let's go on to China, and I'm going to roll through them all, and there's a lot here. So you can see that now we started buying a couple of Chinese stocks, well, one in particular, and we also bought a Chinese ETF, a China ETF, the BMO one. We do not own this particular ETF, but the concept you can see is there, and that is that China has been a bit of an underperformer, just to put it very mildly, over the past couple of years, really since the beginning of 21, and I guess that's 3 years. And yet you can see that it seems to be finding support at an old support level that's gone back to 2022. Now, taking out the 22 October lows that most markets across the world experienced, you can see that there's been a fair amount of support on this ETF at around $25. So we are trading this for an aggressive trade within our portfolios. We are looking mostly at the technology stocks because they're so cheap. Agreed that China has a real problem in their real estate market. It's a very over leveraged, overbought, and kind of a bit of an emergency they've got on their hands. We feel that the tech sector may not be quite as affected, and yet from a chart perspective, it does look very similar to this chart because they're big holdings in most of the ETFs and indices that represent China. But we're sort of taking a little bit of a small but hopeful gamble that we'll see at least a return to the top of the trend line and maybe a breakout based on valuations. But just keep in mind that from most perspectives, it's been in a downtrend. It's now in a base. It's not making any lower lows. That's how you tell it's not in a downtrend anymore, but it's way early. And so I would recommend, if you are actually looking at China as a potential purchase, you don't buy it unless it breaks this trend line and takes out the last high, which is probably somewhere around $30. So as I said, I'm taking a little bit of a gamble on the country, but I'm being very specific with a couple of specific stocks that I like. And I actually wrote a blog on this recently, so you can look at my blog that covered China in mid-November. Okay, so let's just quickly rip through the balance of the ETFs, because most of these I don't hold positions in, and I have no interest in these beyond just their technical appearances. So this is Colombia. You can see that Colombia has been moving in a support resistance zone back in 2020, and then through 22 to current period, there's been a bit of a support resistance zone, same area, which seems to be 18.5 to 22 or so on the chart. It's near the top of that range, and I have to wonder if it's maybe going to run out of steam soon. Now, India has done quite well in the recent year. It had a nice bump at the beginning of 23, along with a lot of stocks on the North American exchanges, but it's consolidating now. It moved out of a bit of a long-term sideways consolidation. I talk about these consolidations in most of my books and videos and whatnot. You get these periods, it looks like it broke out, but it's stalling right now. So I'm going to give this chart kind of a 5 out of 10. And Chile, you can see Chile, I think is the proper way of pronouncing. The market is definitely stuck in another one of these sideways ranges, 20 to 29, let's call it. Had a few spikes over that level. It's about 2/3 the way through that range. Declining money flow. So I sort of suggest that maybe it could move to the top of the range for those who are speculatively inclined, but it's not a chart that I'm particularly interested in. Whereas the overall emerging markets chart, which includes things like Chile and Brazil and everything else we're going to be talking about today, Mexico, if you buy the overall index, it actually has a better looking chart, and that's because some of the stronger movers like Brazil have pushed it high. So if one were to own this ETF, one would target 42. It's about halfway through their range. So we are actually in ETF that represents the emerging markets. We have a small position in our equity platform, and it's similar to this particular ETF. We own the BMO one, but it's again probably halfway through a trading range, and you have to keep your eye on it because it's probably a sell sometime soon. Okay, let's look at Australia. And Australia, down under, just elected, I believe, no, sorry, I'm wrong with Australia. It was New Zealand that elected a new prime minister or president. I'm not sure if they have a prime minister or president, but a new politician. He's a conservative, and that's always good because they can tighten up the ship and maybe give the country some fiscal incentive for the stock market to do better. Australia is kind of in a downtrend. It's touching the top of the trend line. Personally, I would not really like this index. I don't own positions and don't plan on it. I really don't like this chart a whole lot. Now, Sweden, we just traded it. And this is one of these trades where we did see some support down here. It did an oversold washout. We looked at some of the momentum signals we look at, and we bought it around the 32, 33, and we just sold it actually a couple days ago as I can record this particular video. It's right at an old resistance level. We think that's all it's got in it. Okay, and I would say the same thing. We own Germany, and really we're looking at Germany as a sell candidate pretty soon. We do own this particular ETF at this point, but we could be selling it at any point now because it's met our objectives or getting very close to that. We're looking to see if it rounds over, but I'm of the opinion that you may not see me own this ETF much longer. We've made lots of money on it, though. It's done well. In fact, my last video was on Germany. Okay, Hong Kong. Same thing. It's at a at a support level that has been touched many times since 2020, including the COVID washout. And it does seem to hold that level. There was a break in the lows of the bear market that ended in 22. That seems to have held again, and it might just see a bounce. I would say maybe into the $18 to $19 range. Keep in mind that the bigger trend has been in a declining trend, but the lows seem to be holding. So it's at best a consolidation, worth probably a speculative trade similar to the China trade. Okay, Italy is a country that did elect a conservative leader recently, and this again has been met with a fair amount of excitement on the stock. I think it's got some pretty significant overhead resistance coming up into the 34 and a half area. So I don't know how much it has left in it, but certainly it probably has a little bit more room to maybe make a 5% move. If it can break that old high, that would be very good news. Okay, very, very, very significant resistance on the Japanese ETF, EWJ. You can see this was old support, became new resistance. This is classic stuff. It really needs to break that $63 level. If it doesn't break 63, it's still trapped in Never Land. But if it breaks 63, I would target into the high 60s. All right. So let's just see what happens on that. I would not be buying Japan right now. Belgium actually has some upside potential. Yes, it's got a lid at 19, but to buy it at 18, if you're sort of a real short-term trader, it's likely to get there. It kind of looks positive at this point. I think it might make it, especially if the US markets reach my targets, which is probably a lot of you that follow my work know that I think the S&P 500 will get back to the old highs of around 4,800. And that might push a lot of these indices, including Belgium, up to their resistance points. Switzerland broke down from, you can see there was a support resistance pattern back some 4 years ago or so, back in 21, 3 years ago, I should say. And that pattern carried on after a brief breakdown and a head and shoulders bottom. And now it broke that pattern. So the question is, will it enter into that sideways support resistance level? And if it does, it looks like it's trying. If it does, then you could probably target 48 on the Switzerland ETF. But I would probably give it a little bit of time to see if it can actually make it back into that trading zone before I took a position. Okay, Malaysia. Well, Malaysia's in a triangle consolidation within the confines of a longer term downtrend. The fact that it's making higher lows is encouraging. It tells us this may be a consolidation. I'd really like to see this little triangle broken. So I'd like to see a break through 21.5. If so, it would target 23. And if the 23 trend line broke, and takes out the old high of around 23.25 or whatever that is, then you could see lots of upside. This is an interesting one. There's a little bit of noise on this chart, you can see, but it might be an interesting trade, especially if you see this lower triangle breakout. All right, this is the Netherlands. Once again, another conservative ETF, president was elected, and that's good news again for the stock markets in these countries, because you start moving into sort of business accommodating climates. So I do think that Netherlands has a big chunk of resistance coming up around 43. If it can break that, then you could see quite a bit higher upside, but that's an if. I don't know that I would be buying Netherlands right now. It's just got too much resistance ahead of it. Same thing with Austria. Now, Austria has a monstrous amount of resistance that's been in place since the beginning of 22. And if that broke, then it would be a very high probability that you would see around that 24 plus area. That would be a nice trade if we saw it, but it's to be seen. You can see on the right-hand side of the chart, there's the possibility of a breakout. It's really early yet. We'll have to see, because you've seen a couple of these little blips where it just barely moved along the line or above the line and then failed. So let's see what happens. Okay, this one is probably one of the most encouraging charts that we're going to look at on this video, and that is Spain. Look at that breakout. Like, there is a lot of resistance that goes way back to 21, and it looked like it was rounding over, and then boom, it's broken out. So now, they again have elected a conservative government recently, and that's very business friendly. I know I like to sometimes get political, but there's a real, logic behind this, that you get a business friendly government in place, and it's going to help the market. So it's going to help the economy, and therefore it helps the market. So this is good news for Spain, that there's nothing overhead of it right now to stop this ETF from running. And I really do like this chart, and I may actually be buying into it. I don't own positions right now, but this is probably my favorite chart we're looking at today. Okay, France, big level of resistance around the 38.5 level, maybe even 39, as you can see, really needs to break out. It did try breaking out recently and it failed. So I would say that I would need a very significant breakout on this chart before I got excited about France. If it breaks 39 with conviction, I'd probably be looking at it hard though. So sideways, Singapore, just another one of these, support resistance levels, and you can see old support becomes new resistance. It's not a perfect relationship, but that support came in again here. So I'm of the opinion that Singapore, if emerging markets can continue doing well, this could be a decent play, because it looks to me like it has 19.5 in it. It's currently trading at 18. So probably one of the more reasonable charts. We don't own this position, but if one was looking for an interesting emerging markets play, it might be worth a look. And Taiwan. Taiwan is trading in a sideways range. There's been a pretty nice move lately. the risk is always if China moves in on Taiwan, but it appears that the market is discounting that risk for now. Problem is it's at an old support, which became new resistance. You can see level at around 48.5, 49. So my thoughts are I'd really like to see this break before I got excited about it. But it's interesting because if it did break, then you'd have lots of room up ahead, probably to make 10 to 15%. But that's to be seen. I'm not buying it, and I wouldn't buy it until it broke out. Okay, strong resistance on the UK market. Oh my gosh, like 33.5 or so, just hasn't been able to penetrate it. So keep that in mind. However, whenever you see these stocks that have these big lids on them, if they do break out, it can be very powerful. But I want you to notice there's an overrunning theme here on a lot of the charts we're looking at, and that is that a lot of them are approaching lids. Have you noticed that? So just keep that in mind. This is one of the reasons why when I start talking about the stock market, I often do refer to the S&P 500 in the US markets, but really on a worldwide basis, there's evidence to suggest that markets are stuck in a sideways trading range. And you know I've talked about this a lot. In fact, Craig and I wrote a research paper on this that I'm sure many of the regular readers and viewers of this video have received. If you haven't received it, let me know and I can send it out to you. But basically the concept that Craig and I put out at the beginning of 22 when we wrote this paper is that there's a lot of evidence suggesting the markets will go sideways. And we wrote that paper way back here, and lo and behold, that's what's been happening on a lot of indices, including North American markets. Look at the TSX, look at the S&P 500. They're not making new highs. They've been all over the map, but they're not making new highs. So my question is, will these markets break out? If they break out, it's good news. But so far, that hasn't happened. Okay, Mexico. Well, Mexico has been just the darling. When everything else was falling in 22, Mexico went up in a big way. It seems to have found a bit of a lid, rolled over, and now it's on its way to challenge that lid. Will it break it? I don't know. The one thing I can tell you about Mexico is that, you know, there's been lots of negotiations with Mexico because of the heat between China and America. And so Mexico obviously has been getting the benefit of that heat. And you can see that in the chart. So again, it does matter when you have favorable political events in the background for an economy and a stock market. This is why I merge the two sometimes. So if Mexico breaks out past 65, I think there's lots of air up ahead because there's no resistance, but we'll see. I don't think I'd buy it at this point. I think that it might run up to 65, but then you've got that lid. So let's see what happens. Another lid in South Korea. Now, this is an interesting one because this is the classic, you know, downtrend that turns into a consolidation period. I love these kind of charts. I'm telling you, these kind of charts are fabulous when they break out. Now, sometimes you see these false breakouts. So where I drew the line is just kind of a line. It's not necessarily the line that you have to see break. I would actually like to see 67.5 break. In other words, get past into the 68 plus area before I bought this. But if it breaks out, South Korea has a massive upside. We're talking like $85 to the lower level of this zone, maybe even 90 if it hits the upper zone of the old highs back in 21. So let's just see if that happens. This again is one of those charts that I really, really like within the mix. But you'll notice I'm not getting too excited about most of these charts. Most of them are kind of meh, you know, kind of hitting their lids or looking like there's some work to be done before I could get excited about them. The South Korea, and we talked about Spain as well as a new breakout. Those two charts stick out to me right now. I'm not making recommendations. I'm just saying that charts look pretty good, in my opinion. So we're back to Brazil, and you remember 8% dividend distorts this whole look as we saw at the beginning of the video. So let's just wrap this up by saying a lot of the world markets are trading sideways. A lot of the world markets have massive overhead resistance coming very, very soon, if not already being tested. And so my thoughts are that after any move on the world markets in the next few months, as say the North American markets lead the way, as the S&P maybe tests its 4,800 old highs, I think there's going to be a lot of challenge for many of these indices to break out. And that adds to my opinion that there's a decent chance of another one of these super long sideways consolidations that we've seen through history since the late 1800s on the markets. So just keep that in mind, but it doesn't mean there's nowhere to go. We saw Spain, we see the South Korean market. There's a couple others in there that I think were worth looking at. And I encourage you to go through the charts on your own and make your own decisions. But there's always something you can buy. And also keep in mind, within any of these markets that we just saw that have these sideways consolidations, for example, the Brazil chart that I am in right now with Value Trend, well, we've traded those swings. If any of my clients are watching this video, they know we've been in and out of Brazil a few times. So just bear in mind, like, just because the market's in kind of a sine wave pattern doesn't mean you can't make money. In fact, I love these markets and you can make lots of money in these markets. I often think that it's better than a parabolically rising market because that can only go down, can't it? So I hope that video helps. I hope that's given you some ideas, and we'll see you next week. Thanks for watching.